Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news. Equity markets are in a sharp sell-off. The IMF now says global activity is expected to fall 4.9% in 2020, 1.9 percentage points below their April 2020 forecast. They say the pandemic has had a negative impact on activity in the first half of 2020, more than anticipated, and the recovery is now projected to be more gradual than previously forecast. If the expected rebound happens, this will leave 2021 GDP some 6.5 percentage points lower than the level they're expecting at the start of the year. The adverse impact on low-income households is particularly acute, they say, and will probably add more to extreme poverty than at any time since the 1990s. It's a grim realisation that is impacting equity markets. Wall Street is sharply lower, with the S&P 500 down 2.5% so far in mid-afternoon trade and taking $640 billion off market cap. That follows even steeper declines in Europe overnight of more than 3%. Not helping American markets was a sharp and unexpected fall in mortgage applications data for last week. But the rise of the pandemic infections is the main reason investors are suddenly gone risk-off. The IMF report is tough reading. It sees the US 8% lower at the end of 2020 than 2019, and the EU 10% lower. Japan will be 5% lower, while China will be 1% higher, and among the large economies, the clear winner. India will be 4.5% lower, and Australia is shrinking at 4.5% as well. Keeping the Chinese growth going is proving hard work for local banks. Many Chinese commercial banks are offering interest rates for consumer loans at lower rates than to businesses, supposedly to lure quality individual clients. But such loans are raising concerns about their possible unlawful use in the real estate and stock markets. The US Treasury 10-year yield is down 3 basis points to 0.68%. The gold price is unchanged at $1,766 an ounce. And oil prices have fallen sharply today, and it's clear demand is going to be very soft. It is now just over $38 a barrel in the US, down more than $1.50 a barrel. The Brent benchmark is just over $40 a barrel. American crude oil inventories have risen to record high levels. And the Kiwi dollar is lower after the RBNZ OCR review yesterday, down this morning to 64.1 US cents, which is almost a 1 cent drop. On the cross rates, we're less affected at 93.3 Australian cents, but against the euro, we're half a cent down to 56.9 euro cents. That means our trade-weighted index is down to 69.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.